Dallas Fed President Kaplan, one of two dissenters last week as the Fed adopted new forward guidance that incorporates average inflation targeting. You endorsed the old forward guidance and dissented on the new because, according to this statement, you prefer the committee retain greater policy flexibility beyond that point. What does that mean?
What it means is I believe strongly we should keep the current setting of the Fed funds rate, i.e. at zero to 25 basis points, until we've weathered the pandemic and we're well on track to achieve full employment and price stability. That, by the way, is probably going to take at least 2.5, 3 years. The issue is, beyond that point, once we've weathered the pandemic and we're on track to reach our goals, I probably think it's appropriate to remain accommodative, or maybe even highly accommodative. I'm not sure it's appropriate to decide right now that at that point we should leave rates at zero. I would rather leave those judgments to future committees because I think the world is going to look very different post-pandemic than it does now, and I'd rather leave the judgment to future committees who can assess all the factors that are relevant in order to make that decision.
Well, does that suggest you think that we could come out of this with faster growth than most people are anticipating?
Or I'll put it a different way. In my own forecast, I think we're going to have solid growth in the third quarter, 30% annualized, a strong fourth quarter, above trend growth in 2021. And in my own forecast by the year 2023, and I know that's going out a long ways, we could start to approach an unemployment rate certainly below 4%, say 3.5 to 4%. And so I believe that is possible. Obviously, we'll have to see, and a lot of that is going to depend on how well we manage this virus, fiscal policy, and a whole range of other decisions. But when we get to that point, the question before the House is, do you want to still be accommodative in light of our new framework in order to meet our inflation goal? In order to remain accommodative, does that mean we need to leave rates at zero? And I'm not sure, but that's the point. I think it's hard to know right now that far in advance, and I want to make those judgments at the time.
Is that enough to dissent on? Important enough?
For me, it was, and the reason it is by making this commitment now. First of all, there are a few reasons why I dissented, what I just went through. And then my own view is I'd rather use forward guidance where we got more positive benefit. Going into the meeting, the world already thought that rates were going to stay extremely low for the next 2 or 3 years. And so my concern was by making this commitment now, I wasn't sure how much additional benefit we're going to be. But on the negative side, it means if you're in the asset markets, if you're a saver, if you're a pension fund, if you're an insurance company, if you're a market participant, it basically gives you a signal that you're going to need to take more risk. And my concern is about building up excess risk-taking, which can create fragilities and other excesses in the system, which are hard to see in real time and easier to see in hindsight, but could create issues for us to meet our goals. And so that was the reason I felt that the costs were not worth the benefits.